Hello everyone. Thank you for joining us today. And my name is Joseph Ekshoma, and we will be presenting. We are the Group 5. We will be presenting the strategic response and future planning for Delta Aerospace in light of the recent operational disruptions. So, our agenda for today's presentation, is we will be looking at the issues that is present in the Delta Aerospace, particularly with the cyber attack issue. But first, we let's move on to the executive summary. Delta Aerospace is currently facing significant operational disruptions due to a ransomware attack, which has halted manufacturing and impacted their financial processes. Our report for today will assess the current situation and will recommend manual interim process to ensure continuities and separation of duties, which will be presented later on. But before that, let's move on to the uh, detailed financial analysis of the company. So here in this slide, we have the detailed financial analysis based on the budget assumptions for 2024. So the key costs for passenger and military ship sets are outlined here in this slide, including the material cost, labor cost, manufacturing overhead, and the machine hours per ship set and freight delivery. So it's important to note that the manufacturing overhead is composed of 50% depreciation, 40% variable cost, and 10% fixed cost. So here in this slide, it shows the revenue and profitability of the company. So this slide shows our revenue projections from 2024 to 2028. So the projections include the number of passengers from and military ship sets and the total revenue in Canadian dollar. So the revenues here are converted to Canadian dollar at an exchange rate of 1.30 US dollar per Canadian dollar. So our strategy aims to increase the proportion of military contracts which are more profitable to improve the overall financial health of Delta Aerospace. So another note is tax rates is applied as provided here in this slide. In this next slide, we can see some recommendations, but before moving on to the specifics of our recommendation, I will now introduce our next presenter to present to us the issues of Delta Aerospace.
Thank you, Joseph. So now I'm going to explain about cyber attack impact. So first, let's talk about production halt. As you know, the attack has caused a complete halt in manufacturing process. This means that all the productions have stopped, resulting in an immediate loss of production productivity and potential delays in order fulfillment. Then ERP shutdown. ERP stands for Enterprise Resource Planning System. So if an ERP is shut down, there are many issues we have to consider to solve: revenue management, inventory control, supply communication, cash flow management, and so on. And the third is revenue at risk. To give you a sense of financial impact, risking a weekly revenue loss of 1.3 million. This is a significant threat to our financial stability if not addressed promptly. Uh, Immediate operational challenges, supplier payments. One of the crucial concerns is delays in supply payments. This can lead into disruption of our supply chain and strain our relationship with key suppliers. Inventory management. We are also facing challenges in tracking and valuing our inventory accurately. This can result in overstock, stockouts, causing further insufficiency in our operation. Cash flow. Mm, There is an urgent need of effective cash flow management. We need to consider external funding operations to address short-term liquidity issues. Additionally, this situation impacts ability to meet payroll and manage operational expenditures and other expenditures which are necessary in that time. Now, the action plan and next steps. Mm, Immediate actions. Main priority in action plans is ERP system shutdown. It's our top priority because ERP is very important. We should activate our crisis management team to address and mitigate the impact swiftly. Supplier communication. We are promptly communicating with suppliers to inform that potential delays, negotiate revised payment terms essential to maintain the integrity of our supply chain. Cash flow strategies. Currently, assessing our cash reserves and forecasting immediate cash requirements, exploring external funding operations such as short term loans, credit lines is on the table. Additionally, looking at ways how to temporarily adjust expenditure to conserve cash flows. Long-term measures. Moving forward, we need to review the enhance our cybersecurity measures to prevent future attacks. Developing a robust business community and disaster recovery plan is also crucial to ensure we are better prepared for any such incidents in the future. The next topic will be covered by my friend Amandeep Kaur.
Hello guys. So I am addressing the second issue, which is manual interim process. So it is basically deal with to mitigate the risk and ensure the continuity of operations. And the following manual interim process are recommended in four parts. So part A is revenue management, part B is inventory management, part C is supplier communication and payments, and part D is cash flow management. So in part A, revenue management contains like invoice generation, which is used to spreadsheet software to generate invoices manually, and accounts receivable deal with track receivable manually and ensuring timely follow up with the customers for payments. And the third is separation of duties, which is assigned different individual to handle invoice generation and payment collection and record keeping. So, in part B is the inventory management, which deals with the physical inventory checks, which are mainly deal like that. They can conduct regular physical inventory counts for raw materials and work in progress and finished goods. And second is manual record keeping, which maintain detailed manual logs for inventory movements. And the third is separation of duties, which is divide employees responsibility for inventory counting and recording and reconciliations. And part C deal with the supplier communication and payments. So firstly I can talk about the communication, which is used cloud based email systems to maintain communication with suppliers. And second is payment tracking, which is manually track due dates and amounts for supplier payments using spreadsheets. And third is separation of duties, which assign individuals for communication, payment processing, and record keeping. And last is cash flow management. First is cash monitoring, which maintain a daily manual record of cash balances and forecast cash needs. And second is funding, which is secure the additional bank loans of like $3 million to ensure liquidity. And lastly is separation of duties, which is assigned the separate individual for cash monitoring, loan management, and record keeping. So this is from my side, and next part will continue by the Jigger.
Hello guys. So the our third issue is a new machine investment and profitability forecast. So for in that first one is justification. We have capacity enhancement. First point is why we need to invest in why company needs to invest in new machine, and the reason is new machine will address the bottleneck in machine hours and reduce reliance on overtime, so it can save lots of money. Second one is quality and efficiency. In military contracts, definitely they require necessary to meet higher quality standards. So the quality standards, new machine can easily give the quality products. The third one is long term growth. So support the strategic shift towards a higher proportion of the military contracts, which are more profitable. Uh, Now I'm going to talk about financial analysis. When company decided to uh, buy a new machine, so they have initial cost around 30 lakh dollar, and also there are some cost for setup and training cost, like import and export duty fees, taxes, transportation charges, site preparation charges, legal insurance charges, installation and setup charges, and of course there are some employees who needs to do training for the new machine, so there is a training charges as well. And all these costs uh, will cover in 4 year, uh, within the 4 year payback period. So the company can easily get all the money back in within the 4 year. Now I will hand over to the Hisani.
Okay. I'm going to talk about the I'm going to talk about 5-year income statement projection under two distinct scenarios, scenario A and scenario B. Um, Scenario A discuss about there is no change in the production mix, and scenario B talks about the progressive product mix change with new machine investment. In the first one, scenario A, so in this scenario, we assume the current products mix remain as it is, which is 85% of our revenue, of the company revenue, will continue to come from civil aviation and 15% from military controls. The company primary growth driver, the civil aviation sector, is expected to experience slow growth. The company faces challenging here. So inflationary pressure on raw materials and labor costs are projected to reduce the profitability over the time. As the cost increases, maintaining their current product mix will likely to result a decrease in profit margin, so affect the all overall financial health. Moving on to the scenario B, progressive product mix change with new machine investment. So in scenario B, introduce a strategic shift. They plan to gradually increase their military contracts to 30% over the next 4 years. So starting with 20% in the first year, reaching to 30% by the end of third year and beyond that. Uh, this shift will supported by an investment in the new machinery, enhancing the company production and also the efficiency in the capacity. So this scenario offers like suggesting predictions like military contracts typically come with a higher margin compared to the civil aviation. Um, these so they can tap into three more profitability contracts, driving significant revenue growth. Additionally, the new machinery will improve their operations efficiency and also the profitability. So by the end of the 5-year period, they expected a good profitability in scenario B. Now I will hand over to Hitesh to continue with the presentation. Thank you.
Hello everyone. Today I would be discussing the critical issue of the ransomware attack that has significantly impacted our manufacturing and financial processes. The focus will be on whether to pay the ransom or explore alternative measures. As we all are aware right now that the operations of Delta have come to a halt due to a ransomware attack. This has caused substantial disruptions and we need to make an informed decision on how we need to proceed on this. Paying the ransom has the potential to quickly restore our operations, minimize downtime, and the associated financial losses. The option could prevent operation and financial impacts, ensuring continuity in our business process. However, paying the ransom comes with significant drawbacks, like encouraging criminal activity, no guarantee, and legal and ethical concerns. In encouraging legal activity, compliance with the ransom demands may set a precedent encouraging further attacks on our organization or others. No guarantee, there is no assurance that our data and system will be fully restored even after the ransom is paid. Legal and ethical concerns, there are potential legal implications and ethical considerations in complying with the demands of cyber criminals. Now, for the recommendation, I'll hand over to Joseph, who would be proceeding further.
Thank you, Hitesh. So for our group's recommendation, we have alternative considerations of regarding the issue. First is to strengthen cybersecurity of the Delta Aerospace. Next is to have regular backups, and last is to have an incident response plan. So our group decided to recommend paying of the ransom because it could potentially restore the operations of Delta Aerospace, and it will minimize the downtime and financial losses that the company may suffer due to the cyber attack issue. And though it is a short-term solution because it might ensure the short-term continuity of the business, it could further avoid disruptions in the future years to come. And of course, as we have mentioned earlier, the projections from 2024 to 2028 show significant expected revenue growth. And in order for this to continue, we have to invest in cybersecurity measures. And based on what we have presented, a balanced approach should be considered. So if the immediate operational halt is critically damaging and manual processes cannot restore the functionality of the company, then paying the ransom might be necessary as a short-term solution. However, it should be paired with immediate investment in enhanced cybersecurity measures to prevent future incidents. So that would be all for our group. And thank you for listening and giving time to us to present our business report.